Okay, we are live on Facebook and YouTube. You ready, Pat?
Oh, hold on a second here. My hair. I got to give Nancy Pelosi a call and see what salon she went to because I got to get my hair done. This is ridiculous.
Yeah, it'd be a good
I don't know
move.
how Nancy do that. I mean, my
Yeah,
hair
I
looks
don't know.
terrible. I'm embarrassed. I can see what Nancy Pelosi had to go to the salon. That poor girl.
Yeah,
God.
yeah. Well, I want to say welcome to our millions of viewers. 1,225,000 now, of which the 225 are real, and we've made up the million. And there is a reason that we do this after 3 o'clock on Fridays, because we don't want to stress out the YouTube servers while the kids are home taking classes, right?
Yep.
So I was gone last week.
Oh, by the way, we'll try to keep it moving along because I know people got Labor Day plans and
they're going to be hitting the road.
Them already.
So I was out in the middle of nowhere and waiting for this house that I was staying in to get internet hooked up, and they were having problems. So we didn't get it. But then I found out that even if it did hook up, they only get like 30 MPS, which right now we're doing like 350 MPS. 30's pretty freaking slow. So it probably would have just looked really pixelated and choppy. So, but hey, let me start with the numbers. I'm always amazed every week at just how much they just are the same. It's like there's just this pool of 4,000 buyers that go out and they go into contract, and then another 4,000 show up. Not 5,000, just 4,000. So we had 4,500 new homes come on the market, which is higher. It's about 500 higher than it has been. And there is indication that inventory is starting to increase slowly, propelled by the fact that people are seeing that, that home prices are rocking at about a 12% annual increase right now. But the buyer pool increased as well. It's about 4,328. Now we've had a couple of weeks where the buyer pool was 4,400. So, but it's been lingering around 4,000 prior to this. So buyer pool went up versus the past couple of weeks, but new listings went up as well. And what I'm also noticing is there's an increase in homes that have been called back on market. The people that pulled off during COVID, they're now like, they're up like almost 1,100 homes. They're up to 1,100 homes. So that's not a significant number, but it's an interesting trend. So the other thing is we have been, for the month of August, homes under contract are 26% above last year. That's how many people are out there buying now. The rates are low and they're just running there. And so not only rates are low, but I think they're trying to scoop up things because they're not seeing inventory coming up. I put a condo on yesterday. I had 10 showings yesterday and I have 5 today. And so it's probably going to be kind of a slow weekend because it is Labor Day. A couple other quick notes. The Chicago Fed chair said that there's going to be more Fed action coming soon. And it could be very beneficial. And that's under what he's saying. Now, we don't know what that means because most Fed action is just increasing QE and making more credit available. The Fed doesn't print money. They make more credit available for the banks to lend out. Now, how aggressive the banks do in lending is anybody's guess. And when they make movements in QE, it doesn't have an immediate benefit. It's usually a year to 18 months out. So, but he also said, go ahead.
Oh, go ahead. Keep going. Keep going. I'm sorry. Interrupt. Go ahead.
Well, he's saying there's going to be no full recovery until late 2022. And that's the Chicago Fed chairman.
Yeah, I kind of tend to agree with it. One thing I'll just jump in there with the Feds. They do also control how much buying, on the money, the mortgage-backed security market, how much they're buying. Depends, 5 to 10 billion a day or whatever. They can control the rates by sucking in the supply. When they buy mortgage-backed securities, they increase the price, which decreases the interest rate. So, but then you got that component, but then you also got the lenders. Like last week, rates went up a little bit after, the Feds had that, Chairman Powell had this speech. They went up. But then the last 5 days, they've been steadily coming down. But once again, the lenders have been, there was a surge of applications. So then they have a tendency to increase rates they can use rates to kind of, control their volume, because if they get inundated, they can't do anything, like I told you before.
Yeah, it's really hard to see a trend right now. I want to show a chart that I found that was very interesting, and it really shows what kind of blew things up in 2008. So I'm going to share the screen here, and then I've got to blow up this picture. So here it is. This is Mortgage Credit Availability Index. So let's put it in perspective. Look at here, December 2006. So this is an index. So there's a lot of math that goes behind it. Basically, this is showing you anybody could get a loan then, right?
Mm-hmm.
This is mortgage credit availability. Now, we've been hovering down here that the ability to get a mortgage, or the number of people that can get a mortgage, is, there's tighter restrictions, right? Well, look what happened in March. It went off a cliff down here. So the index said, well, it's pretty brutal out there. We're going to make it harder for people to get mortgages. In July, it started to come back, but we are nowhere near that crashing level that we saw back in 2006. I mean, you look at the comparison here of just anybody could get a loan. Yeah. And now this is probably considered normal. It's over 100. So yeah.
I think probably that dip had something to do back in March. I'd say most of that dip had to do with the jumbo market, because jumbo market and the non-QM market, the non-qualified mortgage market, which is basically bank statement loans, 12-month business bank statement loans. Those are kind of the new subprime, so to speak. I mean, people that are self-employed that don't have tax returns. You can, they're looser guidelines, but yet when you start digging into those loans, they still ask for just as much stuff sometimes, but from a different door.
Yeah, and the CEO of Caliber Home Loans, which is I'm sure you've heard of them, right?
I'm doing some loans with them right now.
Kind of like one of the biggest holders of mortgages, and he said that right now FICO scores and debt to income ratio are at really high levels. In other words, the credit scores, the FICO scores that the buyers are bringing in are pretty high.
Mm-hmm.
And he said he's predicting that 2021 real estate's going to be still pretty strong. But he also had a caveat that said, well, it's providing nothing else, knocks us off the hill here. And as you know, and we talk about, there's certainly a lot of numbers out there that are looking pretty bleak from a national economy. But the Fed has come out and said that they are going to concentrate on full employment rather than inflation, because their inflation target's 2%. And so if they blow past 2% now, they're not going to be that worried about it. They're going to concentrate on full employment. That's going to take some time. Yeah. And once it gets going, I mean, are they going to it's like having a party, and once everybody starts having fun, somebody comes in and takes the punch bowl away.
Well, I think, speaking of unemployment, just to jump around, I think the labor numbers came out, and there were 1.4 million jobs gained in August, which was in line with expectations. Unemployment rate decreased from like 10.2 to 8.4. But basically, what's interesting, those 1.4 million jobs, I saw something that on this data that out of those, 238,000 were just of the job gains were actually temporary 2020 census workers. So without those numbers, the unemployment number would have been about a point and a half higher at about 9.9%. So there's still some undertoning stuff that.
Yeah, I think, you look at the percentage and they say it's better than expected, but the bottom line is there's still 25 million people unemployed.
Yeah.
The other two things that are hanging over our head, Pat, is, we had the forbearance extensions, but what does the end game look like at the end of the year? At the end of the year of forbearance, what is that going to look like? Are people going to be back to work and everything's fine? Are they going to have to put their homes on the market? So we don't know what that's going to look like yet.
Yeah, no, I agree. I mean, speaking of that, they said Black Knight said that there's 147,000 fewer borrowers in plans than the previous week. It was about a decline of 4%. And I guess it said, according to this data, the last week's decrease means there's about 1 million fewer loans in forbearance than there were at the peak in May. It said 75% of those remaining are in extensions of their original plan. And to further those numbers, it said a total of 3.784 million loans still remain in forbearance, and 7.1% of the estimated 53 million loans that are currently active, which represents about $804 billion in unpaid principal. It said the decline was across all boards, in terms of, the forbearances, but, FHA saw a modest decline in forbearance of about 23,000, but I still think that there's going to be some overhang,
But if all of those just went kaput tomorrow, would that really cause us a problem in housing?
What's that?
Is that number big enough to where if all the forbearance people had to either put all their homes on the market or foreclose, which is unlikely, would we even feel that at 7.4%?
3.7 million. You figure. My personal gut feeling over my experience is that it'll have an effect. It'll soften the market, but I don't think we're going to see a crash because there's still, I don't have the number in front of me, but as well as I do that the home builders, there's some ridiculous number out there of people that still there's could be like 3 million homes that could be built and still there's not enough demand. It's just.
Well, the thing, and I get a lot of comments on YouTube that people are moving to Arizona. But if people can only move to Arizona if the state they're living in, the market's strong enough for them to sell their house.
Yeah.
A lot of people are moving up to the Coeur d'Alene, Idaho area. My brother was just up there last week, and they said they're getting something like 1,000 people a month, and they're coming from California. And
there's definitely a migration. I mean, and this is to touch upon this. I mean, I think we're in the midst. I mean, I just thought about this. Obviously, we've talked about this the last couple of weeks and months, but we've mentioned about it. But if you think about it, I'm just thinking off the top of my head, just based on my experience, and what we've talked about the last couple of months. If you stop and think about it, we are in the midst of a cultural and housing and suburban change. I mean, look at New York City. They said people are fleeing New York City. It's going to go down. I think it'll come back. But look at LA. Look at San Francisco. I mean, the people are coming here by the droves. And look at Louisiana, New Orleans. The hurricanes. There's definitely a shift in the country of people moving everywhere.
Well, the numbers, I read the Cromford report, and they are saying that they're kind of sticking to their guns too, saying that. They believe that inventory is going to start. We're going to start seeing increases in inventory now in August, and that will be a trend. And we will still be, according to them, in a tight inventory situation for the next few months. So it's not going to switch around quickly in October like I anticipated. But we could have some shocks to our system when these unemployment numbers roll in. The one thing that we will see starting this month that we see every 4 years is the election makes people nervous. Statistically, the presidential elections have never had any impact on price. So if prices were going up before the election, they still go up in January because that's the trend. Conversely, if they were going down, they're still on that downward trend after the election. The momentum never shifts. The only thing that shifts is the anxiety of people on either side that are hesitant to put their house on the market, and they're hesitant to buy because they think something's going to happen. But the reality is nothing happens.
No.
And even if a new president gets in and they're going to change policy, they're not doing it in January. They're hanging drapes in January. So it's, not something that happens overnight. But I think we will see a slight softening in activity in September. And the condo market is brisk now because as people feel priced out, they tend to go to condos and townhomes. And when I did a little deep dive into our Arizona data this morning, I looked at price reductions. I said, okay, are we, it says price change on the MLS. Well, usually people don't raise their prices, but there's two things going on. One, I think people are coming in a little too hot on the lower end, especially in modular homes and mobile homes. Most of the price reductions I saw were in those types of dwellings. I'm thinking, oh, everything's going well. I can get, 60 grand for this hunk of 10. And they go, oh, I guess I can't. So,
Exactly.
and condos. People are coming in too hot on their condo pricing.
Yeah.
So they got to adjust it. And if you don't have any offers now in 7 days, you do need to do something.
Yeah. I'm starting to see people. I mean, I've had some clients that moved up in their price. I had this one gentleman the other day. He had been looking for 9 months in about the 350 to 390 range. And he was getting him and his wife, they, newly had newborn. And he was just I felt so bad for the kid. I've been working with him for like the last 10 months. And finally he called me the other day and he said, you know what? I got a raise. He got a pretty substantial raise in his job. He goes, I'm going to move my my price point up from 380, 390 up to 450, 460. Sure enough, he got an accepted offer last night on a house at 460. Because I told him, I said that 450 mark is it kind of shifts a lot of people. A lot of people want the 250 to 350 market, but you start getting into the 400, 450. And he got the house. So he called me out of the blue and just said, hey, he shifted his strategy and said, if he basically said this isn't working. We want to get we have to go up a little higher, and he could afford it. But kudos to him for kind of thinking outside the box. I told him that'd be a great idea, and I said about 2 weeks ago, I said, I think you'll get a house here very soon. And sure enough, last night he did.
Well, I had an agent call me this morning on the condo and said, do you have any offers? And I said, no, I don't see one yet. I'm anticipating some. He goes, well, do you think it's going to be a bidding war? And I said, I don't know. I said, but if you send me he said, my clients don't want to get in the bidding war. I said, well, you're in a price range where you're probably going to have a hard time avoiding that. But I said, but because it's only 248. I said, if you send me a clean offer, a good one today, I said, I'll present it today. And you never know, they might accept the first clean offer that comes in. I said, but until I see one, I don't know what to tell you. Yeah. And so, I don't see it yet. I got those this morning, and he goes, okay, I'll let him know. I said, if you don't want to get in a bidding war, then be the first one in and make it a good offer. And you never know, somebody will say, oh, good, we're done. Because some sellers don't want to spend the weekend going over, 12 or 15 offers, and especially in the price point with this client I've got now. I guarantee you give me a good offer today. She's not going to say, well, let's wait till we get 5 more. She's going to say, okay, let's be done.
Well, you got to be, the realtor, being a realtor, you got, if you get 10 offers, are all those 10 really solid buyers? I mean, are they fully pre-qualified? I've been working with this guy for like the last 9 to 10 months, and he was ready to go. So, I mean, and I reached out, just little things. Like I reached out to the seller he was a real estate agent himself. I called him yesterday. I explained the story to him. I said, hey, he had 3 other offers on the table, and I called him, explained what I've been doing with the client, that he's good to go. And the agent followed up with a phone call, and I actually sent them an email saying, thank you for your time. Kevin and Natalie would really appreciate you looking strong at this strong offer. And he said that was kind of the key point to him pushing over the edge.
Yeah, when you hear from the lender, it really helps. And if it's anybody out of my millions of viewers out there, if you're thinking about sending an offer in on the listing that I have this weekend, and your lender's Wells Fargo, don't bother. They take so long, and those are the things we look at when we look at multiple offers: is who's bringing the money to the table, who can close, who can close on time, who answers the phone. So we're not only looking at price; we're looking at the experience we've had with different lending institutions. Yeah. And there are some out there where I look at the paper and I go, oh, I'm going to advise you not to do that, not to take this one. I've
It's
I
important.
know that guy. He works part-time.
Yeah, it's important. I mean, that's what pushed, I think, this guy over the edge for the deal, because he heard from me, he got an email from me, and he got a call from the agent, and he jumped on it, and he had three, like I said, three other offers. So,
Well, I talked to an agent this morning, and I said, I don't know what to expect over the weekend. I said, it's Labor Day. So I said, I don't know if we're going to have a lot more showings or we're going to have few. And he said, I can't predict anything in this market right now. He says, I don't know what to tell you. He said, Labor Day, usually people head out of town. And I think with all the restrictions in town and the White Mountains colony, I think we're going to have a lot more of an exodus this weekend that we normally see. And the number of showings that I'm seeing today are half of what I had yesterday. So I think people are booking.
yeah.
I listed that place at 6:00 yesterday morning, had a showing at 7 a.m. So, that some of these people wanted to hurry up and see it before they went to work. So,
Wow.
so you've got to be that aggressive.
On a quick side note, not to change the subject, but that government fee, that half a point, I don't know if you saw that or not.
Yes.
They are going to be re-implementing that December 1st.
They're going to come back with it. Okay.
Yeah. And it might be on, I'm hearing word it's going to be on refinances, but it might be on purchases as well.
Really?
Which is going to, I got to get confirmation on that. I haven't, but that's what I've seen and heard, read. So it would be a half a point, which is really going to suck, to be honest with you, because people are buying homes, or they shouldn't be penalized, for buying a home. But
that 450,000 that you're doing, that guy, he's probably borrowing 400,000, so that's a $2,000 hit, right?
Yeah.
That's sad. There's no reason for it either.
No, it's just they're gonna implement December 1st, but the lenders, anybody doing do a refinance, basically, they're gonna start. Lenders will probably start kicking it in because the loan has to be delivered by December 1st. So
okay. Do you think some of that may just be, the banks right now are really on edge over not corporate, but commercial loans and car loans. They're taking a huge hit. Do you think FHA is thinking that may roll in and start to affect the housing market in general? So they're trying to grab some cash. I'm just spitballing here, but.
No, well, the FHA, they get their upfront mortgage insurance premium of 1.75% on every loan. So, they're getting plenty of money there. It's just the government grab on the conventional side. Half a point. It's basically going to be conventional loans, because they don't have that 1.75 upfront mortgage insurance premium that people are charged on FHA, and then they get the monthly mortgage insurance of 0.85. So. Obviously government loans don't have that. They got mortgage insurance, but it's kind of ridiculous because, if you think about two government loans, anybody putting less than 20%, they're going to have mortgage insurance on it to cover, if they do default on it, to cover, a certain percentage of the loan.
Well, there are some states out there too that have excise taxes that they charge you when you sell your home. Arizona does not have that.
California.
Yes, it's an excise. And I believe in Washington, when we sold my dad's place, it's on a scale. It's 1% of it's this price, 1.5, 1.8, all the way up to 3. And that's a pretty big ding.
Yeah.
So, I'm thankful that Arizona doesn't have that and doesn't try to implement it. So, but you never know. The politicians have never seen a tax they don't like. So.
Yeah, it's ridiculous. So people, I think lenders will be busy for the next couple of months on refis. Rates they got hit a little bit today, but I think there's still things out there that I think they're saying rates can go even. They're pretty much they're kicking around a bottom. The bottom of the river. So people are waiting for rates to go down that much further. I don't see it happening. Maybe a little bit here and there, but the demand has still been there. I've been, like you said, been busy on the mortgage side. Mortgage lenders are still backed up. Jumbo starting to come back a little bit. I've seen on the mortgage side this last week, I've seen some mortgage lenders start to come back from the dead with their jumbo loans. So that's starting to creep in there. So that's good to see. So that's
So we have
about
a
it.
do you see the question we got there, Pat, on the bottom of the screen here?
See, you turn on. Someone's talking about the mortgage rate. Yeah, they went up a little. They gone up a little bit. Yeah, just a tad. I mean, when they do go up, Arif, they might on any given day. If I quote somebody say 3.25, and the cost, just give you an example. Someday I quote somebody 3.25. Let's just say 3.25. And rates go up a little bit, and say that 3.25 was a cost of a par, where you didn't have to pay anything to get that rate. If rates go up to the next day, I might still be quoting 3.25, but that cost now is say $600 or $700. So the note rate itself might stay the same, but your cost to get that rate might be up. So it might have gone up a little bit. So basically, it's not so much your paper rate that you see on your mortgage, but it might be the fee. Rather than not charging you anything, I might have to charge you say $600 or $700 if rates went up a little bit.
I saw a conversation with, let's see, her name is DeMartino Booth. She's a economist. She used to be with the Dallas Fed. And as she was talking about rates, and she had said that while there's speculation that rates are going to get below 2, she says, I doubt that the lending institutions are going to want to go that low and erase their margins. So the Fed may get things down incredibly low, and they want to spur lending, but the lenders may not want to do that, especially the big banks.
Yeah, I mean, the bottom line is, you could look at all economics and numbers, but I try to simplify it to the point where if you had $1 million, Rick, to lend out to somebody and say, hey, Rick, I need money for 30 years. Give me $1 million. Would you loan it out for 30 years, at 2%, knowing that rates will probably go up? So you gave the money out for $1 million at 2%, and 5 years later, rates are at 4 or 5%. You're screwed.
Yeah. Well, and especially if it's going to be interesting to see if inflation kicks in. I honestly don't see how that's going to happen. The Federal Reserve, their mandate for the longest time was to control inflation. And I don't believe that there are enough tools for the Federal Reserve to actually spur inflation. I mean, inflation comes from a lot of different, too much money chasing too few goods. So it's pretty easy for the Fed to clamp down on inflation by increasing rates like they did in the 80s and stalling the economy and bringing inflation down. But it may not be as easy to goose as everybody thinks it's going to be.
No, I don't think so either.
And, if we were to see inflation 18 months after the Feds injected all these billions and trillions of dollars, how come we didn't see that after 2008? It took us a long time to recover. And then the other thing is we have inflation in food, we have inflation in housing, but we have deflation in fuel. And we have deflation in everything like phones and electronics, which are included in the CPI index. So it's really hard to even track it. So they could say, well, inflation's flat. Well, wait, my car payment's higher, my rent payment's higher, my groceries higher. So it's going to be an interesting thing to watch over the next few years. So I'm going to find a cabin out in the middle of nowhere and just stay there. So.
Well, I think things are wait and see what happens. Like I said, the airlines are laying off. I mean, it's just a weird. I'm telling you, like you said, we've been shaking our heads here the last couple of months, but hopefully trying to get some. Hopefully we're talking about topics that people are thinking about too that maybe they don't see on the news here and there. But
well, I think all you can do is look at the numbers every week, and something's going to pop that's going to be the canary in the coal mine.
Yeah. I heard something, I can't remember exactly the saying, but it was talking about what we were talking about last week, that, things are going along and, like you said, the supply and houses and demand, but nothing ever lasts forever. No trend lasts forever.
A frenzied market usually doesn't hang around for more than 6 months.
Yeah.
If it does, it stops on its own because people lose affordability.
Yeah.
So it'll eventually run out of steam on its own. I don't think we'll be talking about a frenzied market next year. Otherwise, because house prices continue to grow, we're going to need a huge spike downwards on interest rates to offset the affordability. But right now, the decrease in interest rates have been offset by the price of the homes.
Yeah. Yeah.
So they're just following each other.
Yeah.
And
if rates do break, obviously, and the thing of it is, we've had spurts in the last 5 to 10 years where rates went from, back in 18, they went from high 3s to high 4s, low 5s. And that really put a kibosh on a lot of different things. It kind of stalled things pretty quickly.
I don't see any rate increases coming down because, Chairman Powell tried that in 2018 and got a wake-up call. He just thought that things were going along. So he pulled back a little bit, and it was disastrous. The numbers came back are bad. So
they know they can't afford to do that now.
Yeah, it's just I don't see it happening for at least 3 years. Rates are going to be low. But if the other scary thing is that while we're seeing numbers that show that you've got, in our case, 4,300 homes under contract in 1 week. Well, what did it used to be? Maybe it was 6,000 homes when we had 18,000 homes available instead of only, 8,000, because we only have 8,300 again today. And so there isn't as much lending going on as we think there is, because we're seeing this frantic activity. That chart I showed a couple of weeks ago that shows when rates go down, lending goes up. In 2016, it showed rates went down and lending spiked up. Right now, we're showing rates dropping at 3, and the level of lending is staying level.
Mm-hmm.
That means that rates have to go down further. But we're already rocking at 2.8%, 2.9. So, maybe if we get down to 2.5, are we going to have more lending? That's nobody knows. So
like I said, the lenders will pull. I mean, if they go down, like I said, there's been that disconnect with the Treasury and the mortgage-backed security market again. Like I said, Treasuries could go down, could do well. And when they say do well, I mean, they go down, or the prices go up and rates go down. But, they've been trending more. They've been trending more together, parallel. They were disconnected in March. They've kind of got coupled back together again. But there's still that decoupling as far as lenders really being hesitant as far as lowering rates, especially now with this, the 0.5%, the half point being thrown out there eventually down the road. They just don't want to get it. They use rates once again to control volume. And I just read that today where there was some that going on this week where they could have rates did come down, but they really actually went up a little bit because like the lenders were still inundated. So they've just been kind of kicking around the bottom. I mean, there's not much room. There's not much more room for them to really go down. And
I think if people are sitting around waiting for rates to go down, thinking it'll be better for them in getting a house, that you're just wasting your time. If you want a house, go get one. Rates are good, because now when you're waiting, the houses are going up 12% a year. Yes, there's a chance that they could level off and could come down. I think if you're thinking of selling, now's the time to sell. And if you want to know what your house is worth, just shoot me a note. I'll take a quick peek. And the thing is too, these online estimates that you see on Zillow and even any things that you see on other real estate agents' websites are not going to tell you what your home is worth. So I've seen things where the estimate online comes out at 225 for a 2-bedroom condo, and lo and behold, it's actually worth 250. I'm looking at a home in Anthem now that we're probably going to be putting on the market in a week. And I pull up Zillow, and it's coming in at about 440 to 449. Reality is, when you look at the data and you look at the really close sales and where it's trending, it's worth about 480. But you need to drill down. You need to have an agent pull on the MLS and see what just sold last week, what's pending. Because Zillow isn't going to show you what's pending. It'll show you a price. So if I'm asking 450 for my house and somebody offered me 475, you don't see that 475 number until the closing date. And on pending, you don't see that number. But you can call the agent and say, there's a house down the street that you sold. Can you tell me if you got multiple offers? and they can tell you, yes, I got multiple offers and most of them were above list price. They can't tell you the price until it closes, but we can disclose that it's above list. So when we look at value, you go, okay, I need to take that into consideration. And appraisals are catching up.
Oh yeah.
Appraisals are coming in at value. So your online estimator, that's just going to disappoint you. So while things are climbing at this rate, the online estimators are not going to be anywhere near what the value of that home is.
Yeah. Good point.
So, get a hold of an agent and just say, hey, here's the address. Will you do a deep dive for me and tell me what it's worth? Because the agent can look at the trends and they can call the other listing agents. So, because I had one where I called and I said, gee, I like your listing price. What can you tell me about your offers? And he said, well, I can't tell you what it sold for until 2 weeks when it posts, but I can tell you that I got more than my asking price. So you should go in confidently. And that's a conversation that you should have before you list a home.
Yeah, good point. Great point.
And then the other thing that I'm curious about, Pat, is the president came out and issued a moratorium on evictions until December or December 31st. Is there any help for the landlords?
I think Arizona's got, I saw there's a $5 million fund that I saw. I don't know how it is right now, but that landlords can actually apply to get money. That I saw that in Arizona. I don't know. I'm sure every state's got different little funds that they can do. But that's
one of my investors, his guy just left. he just didn't tell me he's leaving or nothing. He just came out and went, and because he hadn't got rent, stopped by. He's gone.
That might be another point of reference where supply comes from. People eventually, people that bought homes in 2011, 12, 13, they've seen price gains. So,
yeah, they may want to start selling. I mean, realize the gains. So,
yeah.
Well, look, have a good, fabulous Labor Day weekend. Again, to our millions and millions of viewers, and Pat, try to stay out of trouble, huh?
I will. You know me. All right, buddy. Thanks,
All right.
everybody. Have a good one. Ciao.